Thank you, Senator Tuberville. Senator Gillibrand.
Thank you, Madam Chairwoman. Over the past few months, we have seen 3 of the 4 largest bank failures in American history. Quick action by regulators and the private sector have allowed for stabilization to a point, but it's clear that Congress must act with some banking reform to guarantee long-term economic stability in the banking sector or risk similar future events. For all the panelists, do these banking disruptions pose a risk to our rural lenders and rural creditors?
Well, from our standpoint in rural Iowa and in talking to my Ag Committee, which is scattered across the United States, we have not seen an impact. Those mega banks were not typical bank management, and we just feel there needs to be a distinguished line drawn in the sand between the risk of those mega banks who are investing in far out ways of doing business compared to what the community bank model has always been. It's been stable. It's survived everything from world wars to the ag crisis and survived that bank model. And we just feel that we are stable. We have not seen withdrawals of major deposits or anything like that. And we just think there needs to be risk-based fees to those big places. We shouldn't have to be tagged on to paying for those failures of those people. We get monitored.
Can I just interrupt
Yes.
you for a second? So I'm not concerned about the large banks right now. I'm concerned about community banks, regional banks, smaller banks. And so specifically, and maybe it's not happened to you in Iowa, for the other panelists, have you seen capital flight to larger institutions? Are you concerned with the rising interest rates that it will destabilize your regional banks or your community banks or your partners? Because we have data and information that they have not reached stability. And it started at Silicon Valley Bank, but then it went to regional banks in New York. It went back to a regional bank in California. Now all these regional banks are having a reduction in their stock price, as much as 50% loss. So there's enormous instability in the regional banking system today because of interest rates and because misaligned investments. You may have had very prudent investments and you may be extremely stable, and there are many banks like that I know in New York as well. But for the rest of you, have you seen any flight of capital? Are you worried about misalignment with interest rates? And are you seeing any impacts that affect your business? Go ahead, Mr. Morgan.
Yes, thank you, Senator. I would say that community banks are an integral part of of our small towns and rural communities in Mississippi. But of course, anytime there is discussion of a credit crunch, whether it's ag or non-ag, that bothers all of us. I will say that there is conversation among our communities regarding those concerns. I can't necessarily speak to them because I'm in Farm Credit, but I can tell you that Farm Credit is well positioned right now, well capitalized, and does not have the same concerns. And we're well positioned to continue to support local agriculture.
Thank you. Mr. Wagner?
Yeah, the impact is real. So when you have contagion like you have, I think you start to see increase in spreads. People require more for the risk that's being taken. Farm Credit is part of that. Our GSE spreads have expanded because of that, which is costing our farmers money. And so we're trying to do what we can to move through that. I would say the impact is not real acute right now. It is around the edges, newer producers coming in, newer loans that are being funded. But it is something we're actively watching. We're working with our district bank, Agribank, to monitor their risk and understand what's going on there so that we can protect what's going on. I think what you're seeing more broadly initially is everyone talking about risk. And when everyone's talking about risk, you tend to get more conservative.
Yep.
And so it's immediately impactful to your young beginning farmers.
And for the rest of you three, has it increased your costs? Has it increased the cost of access to capital? How is it impacting your customers? Mr. Cole?
Yes, our customers were able to secure, for the most part, without any issues, production loans for this year. But now it's just apparent that the high rates are going to have a severe impact on, especially with the cost of production just dramatically rising. So it's going to be an issue. There's no doubt.
Mr. Corn?
Yeah, Senator, there's no doubt the change in the banking industry has impacted capital. And as such, for example, this year our reinsurance costs are up probably 40%.
Yeah.
And you see it more in property and casualty because the crop industry has better performance. But everyone was hit with that this year. So we're seeing our cost of capital really go up.
Yeah, and just the one point that I had, I agree with Jim on the reinsurance costs. You know, from our perspective, or my perspective, being part of a large multinational company, I do have access to broader capital that, you know, probably impacts me a little bit less, given what we actually do. The other point that I want to make from a banking versus insurance sector. So in the insurance sector, you know, our investments were focused on assets matching liabilities. So some of the liquidity issues that banks have, insurance companies naturally don't have, given how we manage our business. So I just wanted to make sure that that point's out there as well.
Thank you, Madam Chairwoman. Thank you, witnesses.
Thank you, Senator Gillibrand.